Welcome back. South Africa was once one of the most free countries in the world, but that's dramatically changed in the past 10 years or so. That's according to the latest Economic Freedom Report published by the Fraser Institute. It ranks countries based on the size of governments, legal structure, security of property rights, as well as access to sound money, freedom to trade internationally, and regulation of credit, labor, and business. Hong Kong came out tops this year. Rwanda is the highest-ranked African nation at number 40. And South Africa, well, we've got a long way to go at number 94. To give us more insight into this, I'm joined in studio by the Executive Director of the Free Market Foundation, Leon Lowe. Thanks so much for your time, sir. We appreciate it. We were once number 46. That was in 2000. We're now 94th in the world. What went wrong?
Well, it's actually even worse than that. It turns out there was an error by the Reserve Bank and the World Bank regarding the capital savings and investment rate in South Africa. When that is corrected, as we've pointed out to them, we actually have dropped to 110.
Wow.
We went from being in the top 30 countries of the world to now being in 30% to being in the bottom 30%. The consequences of that are very serious indeed. You heard previously from the Bureau of Economic Research that we might have had R1 trillion extra had we followed global growth rates. It's actually worse than that. Had we achieved the growth rates that are envisaged, for example, now in the National Development Plan and were in earlier growth plans of 5, 6, 7%, let's take 7%, the wealth in South Africa, the GDP, would double every 10 years. In other words, since 2008, the global financial crisis, we would now have double the size of the economy. Instead of the economy being 5 trillion, it would be 10 trillion. Instead of South Africans earning something like $7,000 per annum on average, we would be earning $14,000 per annum on average. Had we grown at those rates which we seemed headed towards after 94, when the economy became rapidly freer and we were heading up to higher and higher growth rates, had we continued that, we would now be one of the world's wealthiest countries at about $30,000 or almost $30,000 per person, with a GDP of something like 20 or 30 trillion instead of 5. So this is very, very serious. Countries that fall in economic freedom down to the levels where we are have high levels of unemployment, and people don't even live longer. We have lower life expectancies, certainly lower quality of life, lower investment. Everything has gone wrong in South Africa. And one of the biggest is that we are not investing and saving. President Ramaphosa is right that we have to fix this, but he's wrong about how to. And how to is very simple, is you have to get your score up on the Economic Freedom Index. If you don't do that, you will continue to stagnate. If you do that, you will prosper. It's really that simple.
So then, of course, if I asked you if the president was on the right track, you're going to say no.
He's on the right track in terms of what he wants, but you don't become rich because you want to. I want to be rich. That's not going to make me rich.
You and me both.
Yes, we both would like to be rich. And the president can say to his heart's content, we want to have foreign investment, we want to grow, we want jobs. What you have to do is change the policies to policies that cause jobs, cause investment, cause growth. And those are ones that give you the sorts of scores we had after apartheid. We went up to something like 40, 42, 43 on the World Economic Freedom Index. We have to get back up there. It's really very simple. You don't need commissions of inquiry. You don't need panels of advisors. You simply get the index off the internet and you improve our scores on the most important parts of it. Our biggest fall was corruption. We went down on the corruption index to one of the lowest, one of the worst in the world. And our size of government has simply got too big, and countries with big governments don't grow. And so it's really not rocket science. You don't need panels of advisors. You don't need commissions. You don't need committees. You don't need reports. You don't need plans. Just improve the score on the index, get it out. There are 40 items roughly. You just work down and you tick the boxes and you make sure we have a better score on each of those. Then we will not create 500,000 or 1 million jobs, as the Bureau of Economic Research said. We now have nearly 10 million people unemployed. Now that's a number, but I want you to think of every one of those as a human being in destitution, miserable, depressed, searching for a job. 10 million.
Yeah.
Now, that is bigger than, as has been pointed out, bigger than the population of 7 of our 9 provinces. And so what we have to do is say, how do we get these 10 million people employed? The trade unions are the people who should most of all support freeing up the economy so that their members get jobs and their membership grows. If there are more people employed, trade unions will be bigger and stronger.
So what about what's already in place and what the current president is working on? He's gone to several countries to get foreign direct investment, which he hopes will ultimately lead to job creation. He's working on a stimulus package that he also hopes will lead to job creation. He's encouraged the private sector to join forces with government to create opportunities for people who graduate from tertiary institutions. Is that not good enough? Is that not ticking any of the boxes in terms of that scoring?
I'm sorry that it'll make probably zero difference. To go and ask people to invest doesn't get them to invest. You have to say, how do we improve the rate of return on their investment? How do we improve the security on their investment? How do we become more attractive to investors? And a president who says, please invest, is not an attraction to investors.
I mean, the UK and China have already invested.
Well, no, they haven't. No, let's get this very clear. They have essentially lent money to the government. In other words,
Theresa May said that she's encouraging her private sector to do business with South Africa.
But you see, again, Theresa May can say to them, please invest in South Africa. None of them will listen to her.
I'm being optimistic because I don't want to be entirely negative about how we can actually address this. I know your points are obviously valid and based on your research.
No, but we have to be realistic. We have to tell the president and Theresa May what to do to grow. China knows what to do to grow. China created 6 and then 7 special economic zones, which are the freest economies on earth, and they are growing at spectacular rates, as much as 25 or even 50% per annum. And India has done the same thing, moved up the index towards economic freedom and created special economic zones. And if we do that the way China did, if we create situations that are tax-free, that are labor regulation-free, that are control-free, that are, take a simple thing like exchange control. We still have exchange control. That is what you do if you're in a banana republic. No sophisticated country runs exchange control. You say to foreigners, please come here, we're going to make it difficult for you to get your money in, and we're going to make it almost impossible for you to get your money out. They will say, go to hell. We are going to go to a country that does not mess with our money. And so what we do is we get rid of such silly laws, and that is what President Ramaphosa should do. He has not received real risk private investors, people who come here and build a bicycle factory, open a new bank, open a new mine, with their own money at their own risk. We don't want our government incurring more debt and more guarantees and more loans from so-called foreign investments. No, there must be real, genuine, high-risk investments who come and employ our people, who pay our people, who produce wealth and get us growing. So I am optimistic, which is that I hope at some point our president and his advisors will do what they know they ought to do. At the moment, they are still hoping that talk can make things better, but changes in policies are what they have to have, and they have to tell us which policies are they changing that make South Africa investor-friendly. And talking about, for example, expropriation without compensation, whether or not it will ever happen, whether or not anyone should take it seriously, this is the way to say to investors, whatever you do, don't come here, go somewhere else. That guarantees you that you will not be expropriated without compensation. We should say to people, come to South Africa. It is the most secure place in the world to invest. It is the cheapest place, the friendliest place, the place with the least red tape, with the lowest taxes. Please come here. We don't even have to say, please come here. Even if we then say, go away, they will come, because they'll come because it's so attractive.
All right. Thank you so much for your time and your insight. We do appreciate it. That was Executive Director of the Free Market Foundation, Leon Louw.